Welcome everyone to Vested Interest. This is Shane back again for their stock pick of the day video. It is March 5th. Today we're going to take a look at a mining company, Sibanye Stillwater, out of the material sector. Let's jump right in. And if you are new to the channel or have just not done so, if you could hit that thumbs up button down below if you find any value in the content, hit the subscribe button, join us on this journey to financial freedom, join the Vested Interest community, and hit that notification bell so you're notified whenever we put out any new content. Drop a comment down below. Do you have any mining companies in your portfolio? Or is it a sector, the material sector in general, one you stay away from? If you have some, what ones do you have? I do personally read and respond to the comments, and I'd love to hear from you down below. So now that we've got that out of the way, let's jump back into the video. This is the Vested Interest Stock Screener. This is how I set up the videos. It's also how I look at a company on a high level. So we're going to run through this criteria here in the video. Now, this does not mean that I invest in the company if it meets the criteria I'm looking for. It means it goes into my watch list. I do more of a deep dive into the financials, try to figure out what I'm wanting to pay for it, usually do a discounted cash flow analysis on it to figure out what price I'm willing to pay. And then I try to align that with whenever the company falls to within 15% of its 52-week low or lower. Obviously, the lower we can buy a stock, the better. Let's keep rolling here. You can pause this and run through this. Now, don't just blindly copy my stock screener, right? I'm not a guru, or I do not have a financial background or a degree. My parents are not wealthy. This is just something I put together. My investment criteria may be different than yours. I'm in my mid-40s, so I'm looking for a lot more revenue versus some of the younger folks out there that might be looking for a lot more growth, right? So don't blindly copy anyone's investing criteria off of YouTube. That's just a terrible idea, right? You don't know me. I don't know you. I am definitely not your financial advisor, and I'm still learning as I go, but I'm willing to share what I'm doing with you. So that's why I do these videos, right? Now, back to Sibanye Stillwater. If you want to know more about them, check them out at www.sibanyestillwater.com. That's www.sibanyestillwater.com. That is their homepage where I pulled this information from. Since its initial establishment in 2013, Sibanye Stillwater has grown and diversified significantly, both geographically and by metal produced. The group has advanced from a single commodity South African gold mining company to become a multinational mining and metals processing group with a diverse portfolio of projects and investments across 5 continents. So that's a pretty big growth over the last, what is that, almost 10 years, 11 years? 11 years now, not quite 11 years. We're still in 2014, but you can see starting from their operations in Africa here, down in South Africa, Zimbabwe. Now they're up in France, Finland, over in Canada, the United States, down in South America, have some in Australia. So very nice growth overall. Again, they are a mining company, US PGMs. I'm not sure exactly what that is. Battery metals, so that's like lithium, cobalt, uranium and secondary mining, gold, copper, right? That's all of the metals that they produce or that they mine for. Now, the reason we're taking a look at them, down 8.60%. This one just cannot seem to find its footing. You can see that drop throughout the day. Close out the day at $3.93 per share. We are talking about Sibanye Stillwater Limited, ticker SBSW, again out of the material sector. Now, this is a South African company, right? So there may be some tax implications around that. So you want to understand those and talk to your tax advisor if you're interested in this company so you'll understand them. And make sure your brokerage is taking out those taxes or you'll be responsible for them. Now, 52-week range as low as $3.85, as high as $9.88. Definitely closer to their 52-week low than their 52-week high. Average volume 4.9 million. Today's was 12, so big sell-off throughout the day. Not sure exactly what it was from, but something was not good. Maybe bad news, or they reported earnings. Let's see. I don't know. It doesn't show their earnings dates. They may have. Excuse me. Market cap of $2.781 billion. This is a small cap company. Beta of 1.41. More volatile than the overall market. You can see that volatility throughout the day. Price to earnings ratio very low at $3.82 per share, but that is not uncommon for mining companies. Earnings per share, EPS, $1.03 per share. That's actually pretty decent compared to its price to earnings ratio. Doesn't have an earnings date listed. Ford dividend is 38 cents. They are a semi-annual payer, so they typically pay out a couple times a year, and typically they do pay out in March, but they have not announced their March dividend yet, so that might be a bad sign. If they're having some troubles and they don't pay a dividend in March, this would be another one that I would add to the list of stopping their dividends, and it would potentially be on the chopping block. So I want dividends and I want dividend growth. But for mining companies, that is a little different because their dividends are up and down, especially these semi-annual payers. They don't typically have a steady dividend. They're based on how much metal they're producing, the spot price of the metal, and how well they're doing as a business. So mining companies in general out of the material sector are cyclical, so you have to be willing to bear with some of the drops before you get some of the rises, right? It might go back down and touch this 385 or even break through it and go lower before it comes back up to this 988 or sets a new high. 1 year target, at least according to Yahoo Finance, of $5.22. So they do see some upside from where it currently sits. Looks like their last ex-dividend date was announced in September. They paid it out in October. Again, we'll see their dividend payouts, but typically they have one in March as well. They have not announced this one yet, so hopefully they announce it soon, or maybe I missed it. Now, I'd like to get into statistics and look at dividend yield theory. To do that, we typically go and look at their 5-year dividend yield average. Now, they don't have it listed, and we'll see their dividend here in a little bit, why they don't have it listed, because their last payout was technically lower than their one before. So it looks like they have declining dividends, but again, they're cyclical, and they don't typically have a dividend that raises progressively over time. It's usually big swings based on spot price, based on how their mining operations are going, how much metal they pull out of the ground. They do have a forward annual dividend yield of 8.8%, which is higher than their typical dividend payout, I will say that. And their dividend yield is at 40.7, payout ratio is at 53.13%. So low payout ratio gives them lots of room to expand that dividend over time, pay down debt, open new mines, that sort of thing is what they do with their free cash flow, which we're going to take a look at here in a little bit. And we want growing free cash flow over time. To get to free cash flow, you'd go into the financials. If you were to go to the Yahoo Finance over here on the left, there'd be a bunch of buttons you could click, statistics, financials, analysis, all of that. So we can go into the financials, a lot of good information there. You can look at their debt to equity ratios, their revenue, is it growing over time? What do their margins look like? Are they paying down debt? All good information. We're going to look at free cash flow. We want growing free cash flow over time because, again, typically if you have growing free cash flow, you have growing dividends. 2020, they were at $7.5 billion in free cash flow. 2021, 19.5, big drop in 2022, negative $356 million. And it looks like a further drop in 2023 down to $4.5 billion. So they might have had a lot of write-offs. Mines are typically capital intensive, so they may be opening new mines. But right now, it does look like they have decreasing, at least from 2021, decreasing free cash flow, which you don't want to see, right? We want to see growing free cash flow, not decreasing free cash flow. So that's a negative. Now, they were repurchasing their own shares back in 2020 and 2021. They have since suspended that, which would make sense. If they have negative free cash flow, they shouldn't be buying back their own shares, even though they seem to be pretty cheap right now. Now, another site that I like is stockanalysis.com. Now, you just pick any sites that you want. Just make sure you're not just blindly following one site, getting all your information from one site. A lot of times it takes them time to update. Sometimes information is incorrect. Having 2 or more as a way to back check the information you are getting is accurate. Now, they only have 4 analysts that have taken a look at this. They call it a consensus hold. I would tend to agree with them on this one. There's a little bit of concern with this company, I think. They do have a low estimate of $5. So if it was to come back up to the low estimate, that would be a 27.23% increase. And that's pretty much in line with what we saw with Yahoo Finance on the previous page. Average estimate of $6.75. That would be a 71.76% increase. And a high estimate of $9, which would be a 129.01% increase. All the while, you could collect that semi-annual dividend if they continued to pay it. Now, I'd like to get into statistics here, look at return on equity and return on invested capital, see how well the company is using its funds to reinvest back into itself, and they are doing quite well. I like 10% or better here. They're sitting at 22% for return on equity. That's above the 10% I'm looking for. And 19.77% on return on invested capital. Again, higher than the 10% I'm looking for. They did not have forecasted EPS growth. I usually look for 5% or better, and I like growing revenue over time. They didn't have that listed either. So they may be expecting negative numbers in that, or just have not updated these numbers. They just didn't have them listed. Now here I want to talk through, I am long Sibanye Stillwater. I do have 584.55 shares. My cost basis is $5.12 per share. I am down 23.52% or $697.73. So this one may be, if they continue to do well or seem like a company I want to hold, I would probably nibble on it, add a little bit here and there, and bring down my cost basis over time here. Now, payout ratio here, they're saying 27.74%. Dividend growth in the negative. So let's run through the dividends. It's semi-annual. They do pay twice a year. Usually payout date is April, October. I think I said March, but April. So would be next month. So hopefully they announce it in March sometime here, usually around the 24th. Usually announce it. They haven't seen it yet. And then pay out in April, announce it in September, pay out in October. And that's pretty consistent. April, September, April. So I'm expecting them to announce it sometime soon here over the next couple of weeks if they're going to pay a dividend in April. Now, you go back to 2014. So they started paying dividends right away, about a year in. They were paying 18 cents. March of 2015, they were paying 20 cents. September, again, they were paying 3 cents. So you can see that, right? They went from 18 cents up to 20, down to 3. March 2016, back up to 23. September 2016, 23 cents again. April 17th, 18 cents. 2020 down to 11 cents. March 18th, 2021, big jump to 86 cents, but then right back down in September to 80 cents. So pretty good. 2021 was a pretty good year. 2022 though, back down to 49 cents. 2022 in September down to 35 cents. 23 in March was down to 26 cents, and then again in September was down to 11 cents. So you'd have to go back and compare this to the spot price of metals at the time, but they are pretty much just going to track how the spot price of metals are doing, how much tonnage of the metals that they produce, and then pushing out their dividends based on that. So it's going to fluctuate. That's why it looks like it's down. That's probably why you can't see the dividend, the 5-year dividend average, and compare it to what it is currently. So dividend yield theory doesn't work that well on these. This is one I am holding. Again, I am down, so I wouldn't mind maybe nibbling on it a little bit. I do want to do a little bit more research into the financials on this one, see how the revenue is doing, see how their debt loads are doing, that sort of thing. But for now, I'm holding. Now, if they were to have, another quarter, or if their revenues are bad, or if their debt looks like it's out of control, this one, or if they don't pay their dividend out in April, this one might be one that would be on the chopping block. I'd keep Valet probably and get rid of this one. That's another company I own in the mining sector, Valet. But it is a company I do like long term. I mean, precious metals aren't going anywhere. They have their hand in the EV stuff. Copper in general is a building material for electricity. So I like materials. I like mining companies. My uncle is a miner, so I understand the fluctuations in this. But these are not companies for the faint of heart. You're going to have big swings. It could go up from this $3.93 back up to $9 to $10 per share relatively quickly if the spot price was to jump up, for example. Well, that is it for this one. Always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Let me know what you think of Sibanye Stillwater down in the comment section below. Is it one you're holding? Is it one you're avoiding? Is the material sector one that you avoid altogether? I know some people avoid mining companies altogether because they don't like the swings. Again, I have some family that's in the mining business, so I don't necessarily mind the swings and can understand them, but I can understand some of you who may be avoiding them because of those. Well, this is Shane signing off, wishing peace and prosperity to you and yours, and remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in investing journey for educational and entertainment purposes. Investing involves risk and kindred money. You should never invest any amount in conflict losing it. Always do your own research. Invest based on your situation, circumstances, and selective criteria, or seek the advice counsel of a certified financial advisor.